What's going on? Welcome back to Trending Stocks. Today I want to talk to you about SoFi. I want to go over some of the current data points, break it down on what shorts did and everything else you need to know. But first, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So SoFi did pull down 2.46%, a fair amount of volume. So 26.06 million shares were traded. 44 is the average. And throughout the trading day, multiple different times, SoFi did attempt to break out, go against the grain of the broader market, but no dice. Despite this, though, there was a lot of good buying that did happen behind the scenes. So these are some of the transactions that occurred on the secondary market above $100,000. So big money was starting to somewhat get back into SoFi. And as I said in the past, SoFi's multiples definitely stand out, even in comparison to a lot of other fintechs, brick and mortar banks. A lot of value investors are going to see that in the coming couple weeks or a quarter or whenever that might be and rush into SoFi, causing it to go up, whether it be as a byproduct of their Q4 earnings. I'm not sure, but definitely this is a very positive and interesting sign. Today, the yields were starting to creep up. That caused a lot of people to be on edge. And as a result of that, a lot of people started to really bring up the fact that the Feds might be cutting rates like later, not necessarily sooner, like whether it be June or whatever else. In my opinion, I do agree with a lot of the analysts that's kind of came out. The fact that they are saying it's going to be the multiples that drives stocks higher. And a lot of the low to mid cap stocks, which obviously is SoFi, those are the ones that is going to have the biggest growth in 2024. So I do want to play this quick video near the tail end of this video, I guess. And yeah, I feel like a lot of people would get a lot of information out of this. So yeah, stay tuned for that. When it comes down to today, there was no actual news, no SEC filings from SoFi, so it was just kind of piggybacking off of the broader market. But despite no news or anything, shorts doubled down today, and which is kind of abnormal because over the last several trading days, shorts were returning shares, which was very bullish and optimistic. But today, maybe they saw something that I'm not really aware of. But 1.25 million shares were increased today. 13.95% of the free float is being shorted. 124.81 million shares overall are being shorted, and cost to borrow average is 0.77%. And based on comparing it to yesterday, it is a little bit lower. And this is just simply a supply and demand, and most likely it is a little bit lower because of the new retail investors that got in yesterday. Maybe not knowingly, they are lending out their shares. So like I said, that's affecting the cost to borrow. So kind of all correlated. And while I'm on this screen, as you can kind of see, number of retail investors were getting out today. Stochastic is at 10, so that's considered very oversold, but there is no defined trend. So it's kind of just flat. So who knows? Definitely, like I said, once the maybe CPI data comes out on Thursday, that could give some justification for SoFi to trend higher, as value investors are going to be seeing and looking for stocks such as SoFi that's at a pretty deep discount. And there was actually a new analyst rating that did come out today. BMO. So James, who does have a 64% success rating, did initiate coverage, so brand new rating, and a $9 price target. So that's kind of a good thing. It's really funny when you do get some bullish ratings that come out, whether it be new or just reiterated, like that does nothing for the stock price. But yet you get someone like Michael, who has 64% success rating, same as James, and he gives a 650 price target. Of course, the stock sells off 6%, 7%, or whatever happened that day. Same goes for David. For whatever reason, a lot of people seem to value this guy who has a 40% success rating. So normally, analysts make a big difference, and actually people care about what they say. With SoFi, it seems to be only the bearish ones that influence the stock price. Nobody cares or just disregards the bullish ones. So I'm not really sure. Hopefully that will change later in 2024 and people actually start to see these $14 price targets, because if you think about it, Andrew has a 67% success rating and a $14 price target. Obviously, he gave that for some reason because there's a lot of upside coming with SoFi. But then again, SoFi's innovative company in one of the oldest sectors in the stock market, so it's going to take some time for people to finally acknowledge SoFi for the growth stock that it is. So let me know your thoughts. As far as options though, $3.1 million in calls being purchased versus $1.59 million in puts. 44% of all the options being done today were bearish. Of the call options that are being purchased today, there was a consensus for it to be above $9, and vice versa. Looking at puts, it is anticipated for it to be sub $8 by the end of this week. So kind of matching the technicals today, oddly enough, was kind of boring. Even though it did attempt to break out, like it didn't really do all that much. So with it closing at 832, it is between this S1 and the pivot. Didn't touch this S1, so this support of 810, nor did it touch this pivot of 873. So it was just kind of range bound between these 2 points. Hopefully with obviously Andrews, or actually I think it's Williams speaking tomorrow, and then the following day is CPI. Both of those data points are going to be positive, causing SoFi to break above this 870 range and trend back into the 9s, but who knows? I still do believe that SoFi is going to get a rush of value investors coming in and causing FOMO leading up to their Q4 earnings, what typically does happen. And then normally as a result of their Q4 earnings, regardless of the results, there's a sell-off. I obviously am anticipating that as well. So let me know your thoughts on SoFi. Give yourself a shout out. Have you been buying? Have you been selling? What have you been doing with SoFi? So I just wanted to quickly play this video, just a minute from this, and it puts it in perspective exactly on how 2024 is going to be the small to mid cap kind of time to shine, and it's going to really be focused on the multiples rather than how many times the Feds are going to be cutting rates. But who knows? Let me know your thoughts.
Recent weakness provide an opportunity for people to get more invested. Our next guest says most of his clients are still overweight cash and need to get back into the market. And he has some thoughts on exactly how to do so, both for stocks and bonds. For more, let's bring in Thomas Kennedy. He's the chief investment strategist at JP Morgan Private Bank. So your decisions, Tom, probably touch on what's going on with a lot of people's money these days. It's good to have you. Welcome.
Thanks for having me, Kelly.
And what would you say this boils down to? Trying to coax people out of cash still?
Our community, which is one of the biggest pools of wealth assets in the world, is still heavily overweight cash. So the rally that we saw in November and December has created a challenge for people to get reinvested. And we're calling it the everything rally. After the everything rally, what do? In November and December, you saw stocks and bonds outperform generally what you would have expected the S&P 500 to give you in an average year, Kelly. So it is a challenge to get people over the hurdle, but I think there's opportunities in stocks and in bonds to really get there.
What are the best ways to do so, you think, as you look around the universe?
Relative to what's in the price, at the broad level, high level, I think the market has priced in a soft landing almost perfectly. If you and I were sitting here, Kelly, say 6 months ago, what should the market price for Fed cuts in a soft landing? I think the average person would say roughly 200 basis points over a year and a half. That's what the market has right now. So I think for the bond market, the easiest thing to say is rate cuts are coming and that cash yield is going to go down. I can move out the curve just a little bit and maybe lock in a 5% yield. I think that's the easiest trade to make. But really what we really need our clients to get to do is to get some more capital appreciation, be ready for the next bull market in equities. Yes, the S&P 500 is trading at PE multiples higher than historical averages, but small and mid-cap stocks trading relatively cheap. And that's where earnings growth should accelerate the most with a better economic backdrop for 2024.
Let me ask you one more.
100% agree. So again, different viewpoints on 2024. Some people think it's going to be Fed's cutting sooner rather than later. I actually think that it's going to be the year of corrections where multiples or discounted stocks are going to appreciate, and this is where SoFi will shine. But then again, I am not a financial advisor. You guys always do your own due diligence. So what's your thoughts on SoFi? Give yourself a shout out if you bought, sold, or whatever else. And with all that said though, I appreciate all of you watching.